2025, it's essential to understand the global economic landscape shaped by both recovery and ongoing challenges. According to projections by the International Monetary Fund and the World Bank, global GDP growth is expected to be around 3.1% in 2025. This represents a slight slowdown compared to 2024, primarily influenced by tighter monetary policies and persistent geopolitical risks. Advanced economies such as the United States, Eurozone, and Japan are expected to experience modest growth ranging from 1.5 to 2%. In contrast, emerging markets, particularly India and Southeast Asia, are predicted to grow between 4 and 6%, while China's growth may stabilize around 4.5%, hampered by structural issues in its real estate sector and rising debt.
Inflation has been a persistent concern for economies worldwide, but it is expected to ease significantly as we approach 2025. Inflation rates in major economies might come close to central bank targets of 2 to 3%. The U.S. Federal Reserve and the European Central Bank are tentatively planning to cut interest rates by late 2024, which could lead to lower borrowing costs in 2025. However, certain sectors, particularly services, may witness sticky wage inflation, exerting some pressure on overall prices and impacting purchasing power. Labor markets are turning out to be a mixed bag. While unemployment rates are expected to remain low in the U.S. at around 4%, challenges like underemployment linger in various regions. Notably, wage growth in advanced economies is likely to outpace inflation, contributing to increased consumer spending. This shift is crucial for driving economic activity, as rising wages can enhance disposable income and boost overall demand in the economy. Geopolitical tensions and supply chain disruptions are factors that cannot be ignored in the 2025 economic outlook. Trade tensions between major powers like the U.S. and China, alongside regional conflicts in places such as the Middle East and Ukraine, pose risks to energy and food supply chains. In response, many companies are accelerating nearshoring strategies, relocating supply chains to more stable, friendly nations like Mexico, India, and Vietnam to mitigate these risks. In terms of technology, the impact of artificial intelligence is anticipated to accelerate productivity across various sectors such as finance, healthcare, and manufacturing. However, this rapid adoption of AI may also lead to job disruption in certain areas. Furthermore, investments in green technology are projected to surge as countries commit to climate policies and navigate the energy transition. Meanwhile, high government debt levels pose fiscal challenges, constraining the scope for economic stimulus in multiple nations. As we turn our gaze to key economies, the U.S. appears resilient yet slowing, while risks of stagnation loom in the Eurozone. In contrast, robust growth in India is driven by its infrastructure and manufacturing sectors. In conclusion, 2025 is poised to be a year characterized by modest growth, interspersed with resilience in certain sectors. However, businesses and investors must remain vigilant in the face of potential risks, including geopolitical shocks, financial instability, and climate-related disruptions, while seizing opportunities in technology and green energy initiatives.